Hello and welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by Adrian Lowcock of Architas to talk about the budget. Hi Adrian.
Hi.
So there were a few changes for investors in the budget. It was a budget of investing in innovation, in AI and in tech. And one of the ways you can access these sectors is through enterprise investment schemes. And Philip Hammond did announce some changes to EIS, didn't he? What did he say?
So the big announcement was changing how much you can invest into EISs, and this has gone up from £1 million to £2 million. So it's for those high net worth investors, really. But there was a sort of caveat to this. It was only in knowledge-intensive companies that this allowance would be increased for, so not for everything else. Also, he slightly tweaked the rules for EISs that for the companies that receive EIS funding. At the moment, they're capped at sort of £5 million, but that will go up to £10 million again for these knowledge-intensive companies, and that the total amount that a company can receive from EIS funding will be at £20 million.
What exactly is a knowledge-intensive company? So
basically, you need to use around 15% of your operating costs over a 3-year period, or 10% every year in 3 years, in research and development or innovation. You also need to have a certain amount of the right type of staff, so individuals with master's degrees, and they've got to take about 20% of your staffing requirements. So it's quite specific actually on that, and the whole point is, again, it's to sort of support this technological innovation and really get sort of entrepreneurial businesses off the ground.
It's a very clear theme in the budget of supporting that particular sector, and for those in the know, this may well be a great way to access that particular part of the economy. But for those who are unfamiliar with the EISs, what are these schemes?
So basically they are tax incentive schemes. They give you lots of tax reliefs, 30% tax relief, income tax relief, capital gains deferral, no capital gains on any gains made. So they're really targeting sort of people to invest in these smaller businesses. And you can put in currently £1 million. There's lots of rules about what types of businesses qualify, but they're usually smaller companies, very small businesses, sort of start-up companies. So effectively, they're wrappers that allow you to invest in very small UK businesses to generate sort of interest in UK smaller companies and those entrepreneurial start-up businesses.
But not only because of the very high initial investment requirements, but because of the nature of the businesses that these schemes invest in and support. This is not a scheme that's suitable for everybody, is it?
No, absolutely. EISs, along with things like VCTs, which are very similar, they are really for higher net worth individuals. Those with sort of who have used their ISA allowances, who have used their SIP allowances, have a very diversified portfolio and are happy to take on a much higher level of risk. So this isn't really for everyone, and that's probably one of the criticisms of EISs and the announcement yesterday, is it's going to be very much for the higher net worth individuals.
Adrian, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.